Hello, Kevin Barry here. I'm going to bring you a 20 to 30-minute run through of Irish Seafarers Tax Explained 2024. So each year we do these, there's always something new that comes up. So I'll run through everything now. And if you have any questions, I'll leave contact details at the end if you want to drop any queries in. Okay, so let's get going. Okay, so this is our website, irishseafarerstax.ie. Okay, and there's lots of free information on here, and also a good place to look is on this blog. And it explains what we do here and our guarantees and everything like that. But generally, when people contact us, we ask them to complete this questionnaire and normal enough information, who you are, where you live, what your email address is. And then we ask about what you work in. Have you been outside Ireland for quite a while? Where have you been the last number of years? Are you employed, self-employed, or something else? And the questions are very straightforward. It's a 2-minute questionnaire. And it doesn't have to be 100% right, but it certainly gives us an idea of what the issues that you're facing are. Okay. And then there's various items, seafarers allowance. I'm not going to touch on the flight crew stuff today, but if you're a flight crew, there's a similar type approach for them as well. Okay. And yeah, just other items we do is down there. That's just to show you around our website. About us is the About Us there. You can look us up. Various things we do and how to contact us directly. And there's our free phone number, and we're on LinkedIn. So just getting straight into it. So I'm going to run through the key items you need to know, and no matter what you're doing these days. So let's get into it, okay? Right, so who we are, well, you'll find details about us anyway on the website that I just showed you. That's another accounting website we have in the various departments we deal with. I'm on LinkedIn, and we have a Facebook page, All Black Cash. It's named after a local rugby team. So, but chartered accountants, QuickBooks Platinum advisors, I've worked offshore myself, and the rest you can look up there, okay? Okay, so I'm going to deal with resident versus non-resident seafarers in particular today. And we'll come back and we'll run through all of those. So just so you have a plan for the next 45 minutes, might get it done quicker than that. So it'll be understanding the difference between resident and non-resident seafarers. I'm going to do a different recording for flight crew, okay? But there is a difference between them, more to do with where they originate. Do you need to file a tax return or don't you? Why would you if you're not even in the country? How to qualify for the seafarers allowance or not? COVID-19 is beginning to be a distant memory, and the force majeure letter, but some of the issues relevant to that are relevant to other aspects of keeping yourself straight with the tax authorities. Getting a mortgage. It's become very frequent now that people leave Ireland to earn money because they either can get the jobs or higher paying jobs or whatever outside the country, but they might want to come back and buy a place, and mortgage applications have to adjust for that. The non-residency rules. So there's different myths out there. We'll just sort those out. Training allowances, are they taxable or are they not? Just have to get through that. Safeguards that I want you to adopt, okay? Okay, so I've shown you our side of things now. Moving swiftly on. So the resident versus the non-resident. So the key items that differentiate the two. Okay, a resident seafarer is someone who pays tax in Ireland. They do get a seafarer tax-free kind of discount if they're over 161 days at sea and they're in an EU ship and they're carrying passengers and cargo with that, and they have an Irish address. That's pretty easy. But the non-resident seafarer can be an Irish person as well, but they don't pay any tax in Ireland. They're here on average 139 or less days per year. They have a foreign address sometimes, they have a foreign bank account sometimes, but they definitely work outside the country. They're paid from a foreign pay point, and their employer is non-Irish, okay? So what all this means tax-wise, to get to that non-resident situation, you need to be less than 140 days a year, 139 or less, okay? Now, there's various rules out there, so I'm going to just go through them. So the 183 days rule, if you kind of look into that, that's 1 day over the 6 months. And there's a myth out there that if you're less than 183 days in the country, that you're not tax resident here. That's what it is, though. It's a myth. Okay, that's one rule, but it's superseded by this rule, which is this is to be 183 days out, but over a 2-year period, you need to be a minimum of 226 out in each year. So that's 451. Now, these are in averages. The actual rule is be 451 days out over a 2-year period. But if you cut that in half, that means you've got to be out 226 years minimum days in 1 year and 226 in the next year. So that's how that goes down. And if you are working to a level like that, it's fine. If you're under it, you're not. So that's called the look back rule, this one, where you see how many days you're out this year and the year before to know if you qualify for non-residency. This 30-day rule, though, if you're less than 30 days in Ireland between January and December, there's no looking back. That alone qualifies you to have immigrated. So it's like if you left on January 20th and didn't come back for the year, you're straight away non-resident that year if you claim to be. That's the 451 days I mentioned. So 226 plus 226 is 452. So if you're hitting those numbers, you're out over the 451 days. But you simultaneous with that, you can't be in the country more than 183 days either. So there's days everywhere. And all days count, though. It's not always work days. It can be days and holiday, stags, funerals, you know. So if you're in or out, just be aware of that all days count. Okay. Okay, so just reminding you of that again. Okay, so that's the big thing. So the non-resident seafarer doesn't owe any tax on these Irish. I'm saying no tax on Irish income. They have no tax on money they bring into Ireland. Okay, that's it. They've earned it elsewhere and they've brought it in. So it's coming into the bank accounts here, but it didn't earn here. So who has to file the income tax return? Well, the way it's gone now with the money laundering rules is that if you're lodging money into an Irish bank account, the bank at least will ask you where it came from. Your bank account is linked to your PPS number, and eventually the tax man, especially if it comes from a non-EU account, may write you asking you if you owe any tax on this. And if you're going to buy a property, the solicitor will ask you where the money came from. And if you file tax returns, and if you do, can they see them? If you don't, can they ask why? So really, everybody has to file an income tax return. And these days with property tax, if you own a place and you, let's just say you're retired or something, or you're just a foreign person in America who owns a holiday home, they're having to file these property tax returns. So it's brought a lot of people into the system. Okay. The records you need to be keeping, though, to corroborate what you have is, if you have one, a discharge book. This is like a passport, and it's stamped as you exit the vessel in a foreign port and then rejoin it. And exit as in you're now discharged and you're off for a while. Okay. Obviously your passport, show who you are and where you came from. Pay slips, it'd be unusual these days not to be getting a pay slip. Your contract, especially if you're claiming this thing called split year treatment. This is where you leave Ireland during the year or return to Ireland during the year. And so part of the year might be resident and part would be non-resident, and it's generally you find it when people are commencing in their careers. Okay. A diary is no harm, just a simple thing that kind of says where you were and what you did. Okay. Receipts, if you were somewhere, okay, the discharge book is great corroboration, but if you were traveling around us or something like that, hotel receipts, camping receipts, anything like that, a photograph, the mobile phone, that can. Mine's not showing up on the screen there. It's kind of coming through now. But it won't fade, those type of things. So at the very least, you should be keeping photographs. If you have a foreign address, keep track of those and proof of it. And the pay slip would normally say where you're getting paid from, but that's important and would have the employer. So all these are important items. Depending on what the nature of your job is, it might be possible to get a foreign bank account. A lot of people using digital bank accounts now, like Revolut, so that can be based in Ireland. But if you have something like that outside of Ireland, America, or wherever you happen to be kind of in business, that's further reinforcement of your status. Husband and wives, if one or other of those is in Ireland and one is not in Ireland, very advisable to file separately. Keep your tax affairs separate. Now, you could go joint assessment. I was on a webinar lately where it was just this situation. The husband worked in Ireland and the wife worked outside Ireland, and she was non-resident. And it seemed that the married allowance could be claimed by the person in Ireland. But I think I don't know, it didn't sound that straightforward on what I was seeing, but I think it's advisable to file separately. You know, if you're leading two separate financially, file them financially, be responsible yourselves, you know. Yeah, the holidays are business trips, so flight records, details where you went, what you did, they count as well because you're out of the country. Bad weather, this could be the other way around though. This can be where you couldn't leave Ireland to return to an oil rig or a cruise ship or a super yacht or a tanker, because it was ash cloud, because there was a hurricane out there. All these count towards your days out if you were scheduled to go. But again, when they happen, it's important to get confirmation of that from your boss to say, yeah, they acknowledge you were prevented returning due to Hurricane Ellen or something like that. If you get that at the time, it just means that everybody who can corroborate the story are there. Whereas if you're a year later looking for these proofs, people have moved jobs and might have forgotten you, so it mightn't be as easy to get, okay? So I'm going to touch base in a little while about trades. We're running into a lot of people who are self-employed now, working offshore, and their tax status can be treated differently. But this thing called the Seafarer Allowance is where you receive extra tax-free income, which if you're earning enough to be taxed at a higher rate will save you €2,540 a year in tax. But the year has to end and you claim it afterwards. It's not at the outset, but it only applies to employees, and they have to be on an EU registered ship, and that ship is going to a foreign port or platform. It's not just anchored out there, you know. So, and ships they're always carrying either passengers or cargo, we find, but that's what it is. It's not a pleasure boat, okay? And 161 days at sea. So that's what they look for. So the Seafarer Allowance is employee related. It's a bit of a discount, you know, for the hardships sometimes of working outside of Ireland, away from friends and family, but it's there. There's a new credit. It's not new so much now. It's new 5 or 6 years ago. It's an extra tax-free allowance to a fisherman that they get. Okay. But that's Seafarers allowance. What it gives you is 6,350 tax-free extra income, like an extra allowance. And there's a tax credit, which is 40% of 6,350 is 2,540. Okay. So just while we're on this income and what records you need to keep and filing tax returns, I'm just going to touch on the mortgage thing now. So what we're seeing is that they look for 3 years proof of income. That's the first thing that comes at you. It'd be filed tax returns or pay slips. You need to have your tax affairs in order. They like to see the bank statements, they like to see the wages coming in, and they'll want a deposit off you. Okay, you won't borrow the 100%. Keep an eye on the term. You know, 20 years is enough. I know property's going through the roof. If you go 30 years, just make sure you can pay it off. Yeah, we have a program to get people out of debt in 7 years. If you're relevant to that. And there'll always be life insurance needed. So if you drop dead, there's money there to pay off the mortgage, and whoever gets the house, there'll be no mortgage on it. Okay. So be aware of these things. Now, they were telling me for a while that they'd only finance people if they're buying for themselves, but that's changed now. They don't mind lending to people building or if they're buying a rental property. Okay, so there's a lot coming at you there. Okay, just to fly through the last bit, we're nearly there, really. Safeguards. So there's this thing called the airside rule, that if the boat pulls into a harbour somewhere in Ireland and you don't leave the ship or the confines of the port, you're still technically outside the country. So just, you know, bear that in mind when you're planning your year ahead. So that's really that. And that would be a typical port. You'd pull in there and walk around, but you're not going into town, you know. This midnight rule that you can be in the country and gone by midnight, that doesn't apply here. If you're in Ireland at any stage during the day, you're here all the time. So if you're in Newry and you drive into Dundalk for a burger and drive back up to Newry, you're taken as in Ireland all the time. And the same way with the travel days, by the way. So if you travel in and you arrive at 11 o'clock at night, your taken has been here the whole day. Or if you leave at 5 a.m. in the morning on a flight out, your taken has been here the whole day. And that can really add up, the coming and going. So just make sure you take that into account. Another trap people get to is they get the days wrong, don't plan ahead. Watch that one. And that's as opposed to being here any time of the day. And again, if you're non-resident, not paying tax, pension planning for tax reasons, it's good for any reason, but for tax reasons, it's not really relevant, because if you're not paying tax, you don't have any tax to save. But if for some reason you have a pension set up and there's money going into it, that tax claim can be carried forward into the future. So if you find yourself back in Ireland with a tax bill, this money you paid in, the tax break will come then. The other thing is the financial services people don't seem to be licensed, and there's none of them in it to discuss investments with non-residents, that you need to be resident, okay? So, yeah, keeping track of the bad weather days is enormous. No harm to get the VHI for yourself. It'll make a difference. Believe me, if you have health insurance, it makes a big difference if something serious comes up. Don't mind what people say, you need it. This voluntary PRSI, so when you leave in Ireland and if you own nothing here, you can still pay into the PRSI system. It's €500 a year, and you have to apply for it, and they have to grant you access. And you won't get in these days unless you 520 historical contributions, like you paid in every week for 10 years, 52 weeks times 10 is 520. But you must apply within a year of leaving Ireland. So the form is VC1, Google it and you'll find it. And you all the time now, if you paid tax in a foreign country, the full income, and this applies to resident seafarers, the full income will be taxed here again, but whatever was paid abroad and you didn't get it back will be knocked off the bill. I'm hearing the foreign workers can get a medical card. It's big in the UK, so I'll have to look into that a bit more, but that's what I'm hearing. And this thing about 12 nautical miles, you know, so if you are outside Irish waters, being 12 nautical miles or more is the key, okay? No harm to have an offshore bank account if you are working offshore. Have the wages paid into that and transfer money home as you need it. It just reinforces the reality of the situation, okay? And you find with Barclays and Lloyd's tend to be big in that space, okay? Okay. So the proofs are fine. Yeah, just to keep track of your paperwork and keep it in the right place as well, of where you were, what you did. And even if you use a Google Drive account or Dropbox, something like that. Now we have a special portal that we send people. They have a password, they can keep everything up to date, and you put your information in there and we have it, okay? And you still have it. So that's it. Just the training allowance we're also finding. There's kind of not a rumor, but a belief it was tax-free. It's not. So it needs to be declared every year. And that's how that goes. And the other thing we're finding is the split year. So if you emigrate out of Ireland to go working on a tanker or merchant shipping, and you're going to be gone for enough days that should make you non-resident, we have it in writing that you claim for it on a tax return. We have it in writing from the revenue, so that's fine. But we're hearing back sometimes that they want you to apply for this during the actual year itself. Now, sometimes the shipper sails, yeah, that you're into the next year before you realize, yeah, I'm not coming back. But they seem to be sympathetic enough in granting that allowance. It just means up to a certain date, your income in Ireland is taxed here, and then after that, it's not, because you're completely gone. But you must be non-resident the following year, and this only applies to the employees, by the way, okay? And then there's UK waters versus Ireland and the UK considerations. So that 183-day rule isn't a big rule here, it's a big one in the UK. And if you have a medical card, by the way, you pay less USC normally too. Okay. All right. Just going to talk about a couple of situations for a second. Okay. There's another little that goes on to, if you pay UK national insurance, then you don't have to pay Irish national insurance because technically you're covered with contributions, and you can, or you used to get a higher UK tax credit here. So I must just check that little one out. It's a quirky one. couple of examples, not the real names. This was a lady worked with Tennessee Link, 50,000 once upon a time, working away here. But she moved to the Cayman Islands, just left Ireland, not so much a seafarer, but just left. She did work with shipping though. No intention of returning, but she was less than 30 days in Ireland in 2023. So in her case, even though she was here the full year in 2022, because she was less than 30 days in Ireland in 2023, she was immediately non-resident and that foreign income was not taxed here. Whereas if she was more than 30 days here, then she'd have to claim split year relief at some point, and hopefully she's out enough days in 2024 to confirm her non-residency, okay? But look at the tax she saved, 14,177. This is a different guy. This would be typical enough now. It could be month on, month off, or 6 weeks on, 4 off, and you see different things, you know. He was on early enough in his career, earning 45,000 a year. So, but he was over the 6 months out, but less than the 225, 226, you know. So he was never going to make the 451 out. So he actually pays tax here, and when the year is up, he can claim the seafarer allowance and get back another 2,500 if he's into the 40% rate or 20% otherwise. Okay. And this was go back to Jane from a moment ago. So in 23, she left less than 30 days, but then she came back in 24. But she was enough days out in 24 to be non-resident for the 2 year combined with 23. Okay. So just, you know, you've got to keep your eyes open. Different lady this was from the West, self-employed engineer. She's doing well, making about 150,000 a year. Working on an exploration vessel month on, month off, but she would bill them, they would pay her invoice. She effectively was a resident seafarer because she wasn't out enough. She also was self-employed in her own name, so she set up a limited company and billed as a limited company. Now, this only works if you're not taking every penny out. So basically, she cut her tax bill by 43,600 by leaving most of her money in the company. It was only taxed at 19%, which is the professional services surcharge rate, and huge savings for her. Okay. This was a different type of dude though, same type of job, Jonathan from Dublin, earning roughly the same type of job. And he was out a lot more the year, out 9 months, but because he's a trade, okay, where are you billing from? So his invoices had his Dublin address on it, so I'm billing you. So that effectively tells the tax man that this company, this center of interest is in Ireland. Bank account was there, the invoices are coming from there. So in a case like that, it's all taxable in Ireland, even though he's out the days, because he's a trade, it's based in Ireland. Okay, so he'd need to be trades, he need to be based somewhere else for it not to be that way. Okay. And yeah, if you go non-resident at all, you're meant to be filing tax returns anyway for the next 3 years. I don't see it enforced much, but it's kind of another rule that's there. Okay. So little things people get. I've seen the non-resident seafarer who works abroad, gets paid for abroad, and their services performed in Ireland. That doesn't stop the wife getting the children's allowance normally or the old age pension. Important she does her separate tax returns if she's not just a PAYE person, you know. So it can be all about domicile. This is the flight side of things. I'll come to that on a different day and I won't confuse it. Okay. But just keep an eye on that. Just fee-wise, give you an idea what we're charging presently. So the 947, it's more that you've got to do with, let me just see a second. Okay, so just updated our fees lately. And just explain how they work. So the first year seafarer coming in, we'd be looking at, we do the anti-money laundering review. That's 100 euros of it. These are inclusive of VAT, by the way, these figures. And then there's the looking at the pay slips, the days of entry and exit, the corroboration of those, how much was earned, where was it earned, and so on. And we look back at the previous years, maybe the next 2 years before that, just have a look at the pattern of going or coming or where people are from. So that all happens in the first year, and that's why there's higher fees. But after that, we don't have to do that again. We have the history done now. And so it drops down to 5 plus VAT. So there's an annual anti-money laundering review, which is a very complex documentation we keep here, and the people are who they say they are. They actually exist. It's not something made up, and the same with companies. But after the first year, which is the main review, the rest of them are just checkups, you know. So the fees dropped in to 707 inclusive of VAT. And then we have payment terms, and 2 of them actually bring down those fees, and 1 of them brings it up slightly. So if you pay kind of earlier, there's good reductions and incentives there. But if you want to pay over, say, up to 11 months, we add on a little bit to finance that. So the quicker people get it for less, and the slower people pay a little bit more, but not much. If it's a new company is setting up, between the company, the bank account, and all the tax registrations, you want to be budgeting €1,000. And then the mining of the company is heavy going. I've got 1,000 there, but you could, depending on how active it is, it could be a multiple of that. So we'd always check in the fees in advance on that one. Okay. So if I was you, what you do now is just have a look at our website, plan your year ahead, make sure you're keeping the records in a safe place, not just on a computer that you might lose, but actually in the cloud, somewhere like Google Drive. Educate yourself, and you have our contact details if you want to go to anything. So, but yeah, that's fine. Take it easy, and bye for now. Thanks very much.